GEO Exploration Limited announces that the board has approved a number of equity-based remuneration and incentive arrangements in accordance with the company's existing contractual obligations and long-term incentive framework. The approvals form part of a single, integrated remuneration and incentive package approved by the board, comprising the settlement of agreed director remuneration in shares, the grant of share options, and the extension of certain warrant terms. The board believes that the use of equity-based remuneration is appropriate for the company and supports long-term alignment between management and shareholders. We'll begin with the issue of shares in respect of director remuneration. At the time of the appointments of Omar Ahmed, Hamza Chaudhry, and Azib Khan as executive directors, their remuneration was agreed in the form of cash and shares. As announced on the 5th of December 2024, Brian Chu receives 20% of his non-executive director fees in shares. However, as the company had unpublished inside information, the award of shares had to be deferred. Accordingly, the company has now issued new ordinary shares as follows: 54,975,000 ordinary shares to Azib Khan, representing unpaid fees from 2024, which Mr. Khan has agreed to receive as stock in lieu of cash, with an aggregate value of £76,965, calculated at the market price on the 16th of January 2026. These fees were accrued within the financial statements for the year ended the 30th of June 2025. 46,100,000 ordinary shares each, being 138,300,000 ordinary shares in aggregate, to Hamza Chaudhry, Omar Ahmad and Azib Khan, issued to the executive directors and accepted prudently in lieu of cash remuneration, consistent with the directors' long-term alignment with shareholders, and 3,062,832 ordinary shares to Brian Chu, in satisfaction of contractual remuneration relating to his role as non-executive director. As announced on the 5th of December 2024, Brian Chu receives 20% of his non-executive director fees in shares. The number of shares is based on the 5-day volume-weighted average price at each quarter end as follows. For the quarter ending the 31st of December 2024, the 5-day volume-weighted average price was 0.298 pence, with 116,308 shares. For the quarter ending the 31st of March 2025, the 5-day volume-weighted average price was 0.124 pence, with 982,816 shares. For the quarter ending the 30th of June 2025, the 5-day volume-weighted average price was 0.128 pence, with 931,702 shares. For the quarter ending the 30th of September 2025, the 5-day volume-weighted average price was 0.358 pence, with 684,679 shares. For the quarter ending the 31st of December 2025, the 5-day volume-weighted average price was 0.180 pence, with 1,379,331 shares. The board notes that at the time of appointment, the relevant directors elected to receive equity in lieu of cash remuneration, having regard to the company's circumstances at that time, including its stage of development, capital priorities, and liquidity considerations. The board considers that this approach appropriately aligned the directors with shareholders from the outset, preserved cash resources for operational and strategic purposes, and was consistent with market practice for AIM-listed companies at a comparable stage. All new ordinary shares will rank pari passu with the company's existing ordinary shares. We now move on to the extension of warrants from the August 2023 capital raise. The board has approved an extension to the expiry date of warrants awarded as part of the company's placing, completed in August 2023. The expiry date of all remaining warrants has been extended by 36 months to the 6th of September 2029 on otherwise unchanged terms. 2 directors, Omar Ahmad and Hamza Chaudhry, hold approximately 79% of the remaining outstanding warrants and are therefore related parties under the AIM rules. The directors believe that this will benefit the company by incentivizing the relevant directors to continue to drive the company's projects forward for the benefit of all shareholders and will, when exercised, provide funds for the company. Warrant holder Omar Ahmad holds 150 million warrants at an exercise price of 0.1 pence, with a revised expiry date of the 6th of September 2026. Warrant holder Hamza Chaudhry holds 40 million warrants at an exercise price of 0.1 pence, with a revised expiry date of the 6th of September 2026. Warrant holder Michael Joseph holds 50 million warrants at an exercise price of 0.1 pence, with a revised expiry date of the 6th of September 2026. The total number of warrants is 240 million. All of the warrant holders have given their consent to this change in accordance with the terms of these instruments. Next, we look at the share option awards and a summary of the terms. In order to continue to retain and incentives the services of the directors and to align their interests with those of the company and its shareholders, the board has approved the following awards of options to subscribe for new ordinary shares. Omar Ahmad, CEO, holds 150 million shares at an exercise price of 0.1211 pence, appointed on the 5th of September 2024. Hamza Chaudhry, CFO, holds 150 million shares at an exercise price of 0.1211 pence, appointed on the 5th of September 2024. Azib Khan, CCO, holds 150 million shares at an exercise price of 0.1211 pence, appointed on the 5th of December 2024. Brian Chu, non-executive director, holds 40 million shares at an exercise price of 0.1211 pence, appointed on the 3rd of December 2024. The total number of shares is 490 million. There are 110 million options already in issue, 50 million held by Azib Khan, and the remaining 60 million held by employees and former directors. The existing options and proposed options held by current directors will represent approximately 10% of the issued share capital. All options are to have an expiry of 10 years from the date of issuance, with an exercise price of 0.1211p. The exercise price represents a 26% discount to the volume-weighted average price for the 7 trading days ended the 31st of January 2025, being the first anniversary of the previous award to Azib, a 50% premium to the 7-day volume-weighted average price ended the 17th of September 2024, being the day Omar and Hamza were appointed as directors, and an approximately 7% discount to the current share price, approximately 0.13p. The options are subject to the following performance and time-based vesting conditions. A. 15% of options vest if the 1-month VWAP reaches 0.2422p, being 2 times the exercise price, or more at any time within 2 years from the date of appointment. B. 15% of options vest if the 1-month VWAP reaches 0.3633p, being 3 times the exercise price or more at any time within 2 years from the date of appointment. C. 20% of options issued vest on the first anniversary of the date of appointment subject to continued employment. D. 20% of options issued vest on the second anniversary of the date of appointment subject to continued employment. E. 15% of options issued vest on the third anniversary of the date of appointment subject to continued employment. And F. 15% of options issued vest on the fourth anniversary of the date of appointment subject to continued employment. For the purposes of the above, 1-month VWAP means the volume-weighted average price of the company's ordinary shares over the 20 trading days immediately preceding the relevant test date. Within each tranche of options, once the vesting criteria is achieved, 50% may be exercised immediately, and the remaining 50% may be exercised from the date 3 months following vesting. The vesting of all options is conditional upon the option holder remaining engaged, employed or appointed by the company at the relevant vesting date, and typical good leaver, bad leaver provisions. In relation to the award of options to non-executive directors, such as Brian Chu, there is some debate as to whether an interest in the shares can impugn their independence, chiefly amongst regulators and proxy advisors. However, market practice for smaller companies is making such awards more common, providing they are at a relatively minimal level on the basis that such smaller companies need to attract and retain senior, non-executive directors that they could not otherwise afford. In this instance, the award has a total exercise value of £48,440. Mr. Chu confirms that he is independently wealthy and not dependent on his salary from GEO or this award. As such, the directors believe this award is appropriate and necessary to secure the services of Mr. Chu and align his interests with those of the company and its shareholders. Next, the summary of directors' interests. After the issuance of the above shares and securities, the directors have the following holdings of GEO securities. Omar Ahmad previously held 477,949,240 shares. He received 46,100,000 new shares, bringing his total to 524,049,240 shares. He also holds 150 million warrants and 150 million options, representing 8.94% of issued share capital and 12.3% of fully diluted issued share capital. Hamza Choudhury previously held 168,319,990 shares. He received 46,100,000 new shares, bringing his total to 214,419,990 shares. He also holds 40 million warrants and 150 million options, representing 3.66% of issued share capital and 6.04% of fully diluted issued share capital. Azib Khan previously held no shares. He received 101,075,000 new shares, bringing his total to 101,075,000 shares. He also holds 150 million options, representing 1.72% of issued share capital and 4.49% of fully diluted issued share capital. Brian Chu previously held no shares. He received 3,062,832 new shares, bringing his total to 3,062,832 shares. He also holds 40 million options, representing 0.05% of issued share capital and 0.64% of fully diluted issued share capital. The total directors' interests in terms of previous shareholding is 646,269,230 shares, with 196,337,832 new shares issued, including 190 million warrants and 490 million options. The directors' total interests are 842,607,062 shares, representing 14.38% of issued share capital and 23.47% of fully diluted issued share capital. The total shares in issue previous was 5,663,107,159 shares. The total shares in issue now are 5,859,444,991. Moving on to related party transactions. Certain of the arrangements described in this announcement constitute related party transactions for the purposes of the AIM rules. In relation to the share options awards, as all of the directors are receiving awards, there are no independent directors for the purposes of AIM Rule 13. Accordingly, Spark Advisory Partners Limited, the company's nominated advisor, considers that the terms of the proposed awards are fair and reasonable insofar as the company's shareholders are concerned. In relation to the warrants terms amendments, the independent directors for the purpose of AIM Rule 13, being all of the directors other than Omar Ahmad and Hamza Choudhury, consider, having consulted with Spark Advisory Partners Limited, the company's nominated advisor, that the terms of the proposed amendments are fair and reasonable insofar as the company's shareholders are concerned. In relation to the issue of fully paid ordinary shares to Omar Ahmad, Hamza Choudhury, and Azib Khan, the only independent director is Brian Chu. Accordingly, the independent director, having consulted with Spark Advisory Partners Limited, consider that the terms of the proposed share issuance are fair and reasonable insofar as the company's shareholders are concerned. Finally, admission and total voting rights. Application will be made to aim for admission of the consideration shares, the new ordinary shares, which will rank pari passu with the existing ordinary shares. Admission is expected to become effective, and dealings in the new ordinary shares to commence on or around 8 a.m. on the 11th of February 2026. Following admission, the company's issued share capital will comprise of 5,859,444,991 ordinary shares, each carrying one vote per share. Accordingly, the figure of 5,859,444,991 may be used by shareholders as the denominator for calculations by which they determine whether they are required to notify their interest in, or a change to their interest in, the company under the FCA's disclosure guidance and transparency rules. This brings us to the end of Today's regulatory news service announcement. GEO Exploration Limited remains committed to responsible exploration and delivering long-term value for our shareholders. We look forward to updating the market as we progress our work programs. Thank you for listening. For more news and insights, follow us across our social media platforms.